Alright, I want to go ahead and wrap this thing up. I don't want to spend too much more time on this, but because of the outcry, people still don't understand what's going on. I got a couple of things I got here in front of you that we're going to look at. I'm just going to walk you through some of it. This is a chart that someone posted here. Check it out. I'll read it to you. It says, "Sorry for the mistakes in spelling. For some reason, God punishes me and forces me to educate masses, sacrificing my free time, and the masses wouldn't do it for me, I know. Do you see the red line? This is perfectly legit pattern before sell-off. No one expected such a large sell-off, but this prelude to sell-off is completely legit." Okay, someone posted this on a public forum. This is how a fat finger looks, and they did this, and it says, "If these trades get busted, that only shows you how powerful politicians and business leaders are. They can twist reality to serve them." This is a legitimate chart here, okay, looking at the Dow from yesterday. Alright, so that's one thing I wanted to show you. Another thing I wanted to show you is that the NASDAQ and the New York Stock Exchange made some agreements to bust some of the trades that occurred yesterday. So I want to show you that too. These ticker symbols here are some of the ones that are affected. Some of these are ETFs. You can see this is the rule they came up with for the NASDAQ. They said any trade price that's greater than 60% or less than 60%, they're going to bust. And then it gives you the prices here. So let's just take a look at some of these here. And, you know, some of these may appear a little familiar to you. Let me just get down to some of the ones I want to show you real quick. They are quite interesting, to say the least. I think you're going to get some new perspective here on what we're dealing with. Now, some of these you'll see that I talked about yesterday when I showed my chart off to you. So, here we go. Do you remember this right here, this PQBW? Remember this right here? Well, look what they're saying here. Basically, if you bought at $33.66 a share yesterday, and you had a sell stop in, it's possible you got stopped out at $8.41. So that means you have to eat the difference between $8 and $33 a share. Now, they didn't punish you too bad, because I think this one went to 10 cents or 15 cents yesterday. So they're saying they're going to erase all trades below $8.41. Okay? But that's still a massive wide gap between $8 and $33. Or how about this one here? Look at this one. The difference between $88 and $22 a share, they're going to bust anything greater than $88 and bust anything less than $22 a share. This is massive, guys. Take a look at this stuff. I mean, look at this one. $41 a share, $10 a share, PNQI. I mean, read it and weep. That means some poor saps got just decimated, got their faces ripped off. That's what we call that, ripping a person's face off. That term was coined in derivatives back, I don't know if some of you have read the book that I told you to read called Fiasco, explaining the how Goldman Sachs and Morgan Stanley and all the Wall Street firms rip the faces off of countries and destroy their economies, and how they even have rogue black ops type operations here in the States, and they've been doing it for quite a few decades now. Some of you remember the Orange County, California debacle, and Mexican debacles, and Argentina disasters. All these collapses that you've ever heard about have been co-opted through Goldman Sachs, Morgan Stanley, JP Morgan. They create exotic derivatives and things like that. They create financial instruments that are meant to explode in the person's face and thus ripping their faces off. Anyway, just wanted to show you this. They're busting all these trades from yesterday, guys. They're taking them out. Alright, that's part of the game. Alright, let's move on here. I'm going to show you some other stuff that I wanted you to see. Let's see, moving right along. Check this out. Here's an article here, Wall Street Journal. Right here's a quote from Procter & Gamble. I had to show this to you. Okay. This prior day's volume was 28 million shares in Procter & Gamble. Okay. Shares outstanding. It appears that there are about 2,879,000,000 shares outstanding. All right, remember I explained to you in the prior video that You know, if you're going to short something, you got to locate the shares. Even if you can do naked short selling, your broker still has limits and restrictions. And technically speaking, you're supposed to locate the shares and blah, 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 blah. All right. Also, there are checks and balances in place where, you know, you just can't sell. I don't care if you're Goldman Sachs. Goldman Sachs can't even go in right now and say, sell me 1 trillion shares of the QQQQ. First of all, it doesn't. That many shares doesn't even exist. All right, even if it did, you still have to locate the shares. When you're selling something, you got to locate the shares. Even on short selling, there's still limitations and rules that have to apply. Now, they do make special rules for the big wirehouses and the big banks. They can do things a little bit more than what other people can do, but understand this. The individual that is sitting there, that is overseeing the algorithms and whatnot, making sure everything is going smoothly, they have a team of people that do that. So even a king error like that still would not apply. Most of the time, it's not even human beings involved. They pay these doctorates to come in, these physicists and stuff to come in and program these large multi-million, billion-dollar, billion-dollar technology here that these guys are programming. And it does everything for them. All they do is sit and watch and just oversee, make sure it's running smoothly. But so they're not technically sitting there necessarily and buying and selling. The computer's doing it for them. So what happens is, it's only going to do what it's programmed to do. So if it's programmed to sell at a certain price, that's what it's going to do. If it's programmed to buy at a certain price, that's what the computer is going to do, up to its limitations and parameters that it's programmed to do. So there's really no such thing as a rogue trader in that sense, okay? There's so many checks and balances, it's not even funny. Anyway, here we go. Wall Street Journal. Market plunge baffles Wall Street. They're telling you right down here that the situation, blaming the high frequency trading and all of that. No, look at this. Here it is right here. Several high frequency firms, including TradeBot Systems, which says it often accounts for 5% of the U.S. market's volume, they stopped trading when the market grew volatile. With these traders on the sidelines, there were few potential buyers, which may have contributed to the plunge. In other words, it's not an error. If the price is exchanged at that rate, that's what's going to happen. All right, moving forward. Check this out. Here's another article, and this one I really want you to check out. Okay. In a statement late Thursday, the Chicago Mercantile Exchange threw cold water on this rumor. What rumor is that? The rumor that a major firm, and they were talking about Citigroup, okay, accidentally triggered a trading program worth $16 billion instead of $16 million at the Chicago Mercantile Exchanges. And in a statement late Thursday, the CME threw cold water on that rumor, saying that trading by Citigroup in its stock index futures market, the E-mini, S&P, and NASDAQ, does not appear to be irregular or unusual in light of market activity today. CME Group said that while its policy is not to comment on individual participation in its markets, it was releasing its statement about Citigroup in light of volatile market conditions. In other words, they're telling you what I told you earlier. Globex is an amazing order routing system, all right, that has been tweaked to perfection. It routes and matches all the orders, so there's no such thing as a bogus order going off. If a price is printed at a certain price, that's what the price is. So if I'm selling it at $5 and someone's buying at $5, we're matched. And it's a first come first served basis. Okay, if no one is there to match me, then the price continues to move beyond that. And finally, in fast market scenarios, like I told you, in a fast market, fills aren't guaranteed, man. I mean, that's just how it is. So anyway, I don't want to belabor this anymore, but I will end with this article here from Minionville. Check it out. The hidden stock market crash. As humans, we're generally loath to accept the notion that we don't really know what's going on. Rather than constantly confront our ignorance, we construct a patchwork of loosely connected conceptual frameworks inside which we neatly place anything even remotely confusing. We don't need hard proof these frameworks represent truth as long as their supporting evidence withstands at least a gentle prodding of inquisitiveness. And then it goes on to say, here, toward the bottom here, it says, sure, Procter & Gamble can seek 30% in a matter of minutes. Of course they can. But the squad at the SEC, or is it the New York Stock Exchange, or the NASDAQ, or the CFTC, or is it the Fed? Well, anywho, someone's keeping an eye out to make sure everything is on the up and up. In other words, he's letting you know straight up, the PPT, the plunge protection team, ain't going to allow certain things to happen except what they want to happen. Then once in a while, some nasty tail event comes along and uproots our confidence in the system, leaving a little seed of doubt and otherwise sublimes the conscious. And then it says here that yesterday's little hiccup, a glitch in the matrix, if you will, gnawed a not insignificant chunk from the framework this country places around its financial markets.